Hey guys, it's Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things I've used to build up a sizable rental portfolio in about 2 years, and now manage that portfolio. Today I want to talk about debt. So as a real estate investor and anybody looking to invest in real estate, the odds are you're going to use debt. I love debt. Cheap money is cheap right now at the time of this recording in early 2021. Debt, still your mortgages are like 3 to 4%. It even got as low as 2. So 2 to 4% for a mortgage. Unbelievable. When average inflation is 3% and you're borrowing money basically at the cost of inflation for 30 years fixed, you can't do any better than that. So, however, when money is cheap, people seem to borrow a lot of it. I've heard many of stories. One of, you guys have probably heard of Mr. Dave Ramsey, no debt ever guy. Well, that guy, I'm trying to think of a proper word for it, but he basically got out of, borrowed too much money. He got ahead of himself. He got too big for his britches. So he was investing in some commercial real estate. If you've ever listened to the story, he always talks about, don't buy rental properties with debt, blah, blah, blah. Pay your house in cash or all that crap. Well, he's so scared of debt because he lost his rear end because he was over leveraged and in a commercial real estate deal. So not residential stuff. He was in a commercial deal that went south and he couldn't float 10, 20, 30,000 a month on the mortgage. So that's how he lost his money. And that's why he's so scared of debt. Now, if these people that we're about to talk about, if you're one of those people that has credit card debt and stuff, you probably need to listen to a little bit of Dave Ramsey. The fact of the matter is debt can be a huge, huge asset if you use it wisely. If you use it to buy assets, it can also be a big hindrance if you use it to buy stuff that goes down in value. Clothes, cars, consumables, stuff like that. So I was reading through this article from USA Today, and some of these stats kind of blew me away, and I wanted to talk through them a little bit. So consumer debt is over $4 trillion, excluding mortgages. 4 million people gained access to credit last year. And much of that growth has been driven up by a pickup in consumers with subprime credit, meaning those credit scores of 600 or lower. If you guys don't understand the credit score realm, really anything about 650, 700 and above is considered good. 725, 750 and above is like exceptional. And there's people, it goes up to 850. If you're below 600 in the fives, you're not, you've missed some payments. You're not paying your bills really on time. Some 40 million Americans, or 16% of adults, think that they will miss at least one credit card due date in 2019. So this was from a 2019 study. The survey said 65% of those people between ages 23 to 38, a lot of my demographic, you guys are watching this, are likely between 23 and 38, are most likely to be carrying balances, mainly for day-to-day expenses. So over half, almost 2/3 of people between 23 and 38 are going to be carrying balances. So this concerned me because I've put stuff on credit cards before, 100%, especially in college when I was doing stupid shit and buying drinks and being an idiot. But when you use debt intelligently to buy assets that go up in value, can be extremely lucrative. However, I don't know if you guys have watched I've got another video on book recommendations. One of them is Set for Life by Scott Trench. He's the CEO of Bigger Pockets. Scott wrote this book, and basically one of the biggest things he talks about is getting your financial house in order before you invest in real estate. A lot of people come up and say, oh yeah, man, I've got no money. I've got 40,000 in student loans. Got a little bit of credit card debt, got my car loan, but I want to get started in real estate. What do I do? And I'm like, first, what you need to do is get your credit score up, pay off some of your debts, get your financial house in order, save some money, and then come back and invest in real estate from a place of strength. If you have bad financial habits in real estate, or in your personal life, it will translate into real estate. So instead of making a stupid decision with a couple $100 every month or every 2 months, you're going to make a stupid decision with a couple $100,000 in an investment. And that's where you lose your ass. Because a couple $100 here or there, yeah, it might suck. You might be paying 15, 16, 20, 30% interest on a credit card. But if you do something stupid with a couple $100,000 asset or a house, whether that you live in it or it's an investment property, you could be losing tens of thousands of dollars. So That is why you want to come and invest in real estate from a place of financial strength. So why I'm saying that is because you have all this debt, these people who are getting into debt. And again, this was before the coronavirus hit. So this was a study before then. Now it's probably worse. People have lost their jobs. They've had to tap into savings. The government's given out a couple $1,000 checks, which whippity shit, that doesn't help anybody who's trying to pay their mortgage. So if you guys are looking to get into real estate, or if you have credit card debt, please, please, please build your financial house first. Get your financial house in order, get your credit score up, pay off some high interest debts. If you pay off your credit card, you're instantly making 20, 30%. I mean, there are some credit cards where they're 15, 16, 17, but even then, a good real estate investment will wake you 15%. So if you got a credit card debt at 20, 30, 35%, pay that off. You're immediately getting a 30% return. Then when you get your financial house in order, invest in things that pay you every month or go up in value. You know, buy stocks, buy real estate, don't buy vehicles, don't put vehicles on credit cards, things that depreciate in value. You don't want to do that. So I hope that was helpful. If it was, let me know. If it wasn't, let me know. Comment below, send me an email, text, whatever. And I appreciate you guys watching. I'll see you all next week.